This is like a real-world use case in the direct meaning of this word. And I really want to kick off this panel with the introductions. So Sanjeev, want to start?
Hi, thank you, Yev. So my name is Sanjeev. I'm the co-founder and chief business officer of Zonix. So we offer institutions the service to actually, kind of put any assets on chain in a regulated manner, and we've inbuilt those compliance on smart contracts. So you can issue any securities in anywhere in the world. Almost at 22 jurisdictions which we set up in our smart contracts. And today is a very special panel because we have the actual issuers who have used our platform and going to be issuing securities in the US. These are Reg D 506C private placements. So.
Yeah, thank you, Sanjeev, for that. My name is Patrick Giardina. I'm CEO and chairman of Simon Gardner. We're a newly formed entity, and distressed agricultural, if you're in the TradFi space. I love saying that. I'm learning all these new words. I'm not from your world, so thanks for the education today, guys. But as we move into DeFi, we're looking to offer a 506 of Reg D offering through Zonix and our partners up here to address 4 separate verticals, which I'll talk about in a second.
Good afternoon, Jeff Simonetti. I'm the founder of the Aqua Exchange, and so we assist municipalities, developers, and groundwater sustainability agencies in the Western United States find water resources. And I'm working with Patrick on looking for potential opportunities in the Western United States to tokenize water resources.
Hi, everybody. I'm John Kiko. I work for the Hedera Foundation. I'm on the business development side, focused on financial markets. The Hedera network is a layer 1. We're the top 10 market cap, and it's governed by Fortune 500 companies, and we've been around since 2018. We're really focused on the tokenization sort of sleeve as well as AI use cases.
Yeah, thank you. So I have a really important question. Why tokenize instead of traditional raises?
About 3 years ago, Jeff and I were working in the Central Valley of California, both as consultants and lobbyists on a variety of issues that intersected with DoD, land use assets, mitigation credits, water rights, as they interface with DoD, state and local entities, and we were working through a few properties, and we met some creditors, some bankers, who said, hey, look, under these new macroeconomic changes through the SIGMA Act and other things that were going on, some of our farmers, some of our water assets, some of our properties here in California and Arizona are starting to go sideways. Is there something that you can do? So we met with some creditors, and I said to them, don't let it go to the lawyers and don't let it go to bankruptcy. Like, we'll figure something out for you. And I had no idea what I was talking about. But we were able to actually transact a few properties right off the bat. And Jeff and I, that was 3 years ago, started trading a white paper between each other with the intent to go a TradFi. Again, I'm using all the lingo now. For me, an equity issuance, right? So Reg D issuance. I said, let's raise some money. We'll go keep it out of bankruptcy. We'll buy it at a discount. We'll hold these properties as a long-dated option for future development. And we'll create 4 verticals within our fund that'll be non-correlated, but all real estate related. So agricultural properties, water rights, what we call preservation properties or mitigation credit properties in the Southwest, and then residential properties affected by wildfires. And we wrote the paper, we started getting some traction, but we didn't really have the resources to go through that full road show and raise and those types of things. So we had, and serendipitously, I'd met my partners in the back there, Robert and Dennis, and Sanjeev here, and we started talking about the water tokenization, and we started talking, and today it's nice. We saw the bell ring a minute ago, but for me, it's sort of a bell ring for us because again, we're launching this token to go live on the platform.
Gotcha. Just wanna share your part of the story.
Sure, yeah, and let's give a little bit more of a background in terms of where we think there's opportunities, and it's particularly in the Western United States. And I'll start at sort of a high level and talk a little bit more about how it applies to AI and crypto. So the Western United States in particular has been facing serious long-term drought challenges, and it's both supply and demand side. So on the supply side, because of climate change and a multitude of other reasons, you've seen precipitation in the Western United States drop off pretty substantially. At the same time, you've seen a prevalence of things like permanent crops. So if you enjoy your almonds and you enjoy your citrus in the winter, all of that's grown in the Western United States, or a substantial portion of that's grown in the Western United States, and that increases the demands on water resources. And as a result of that, you've seen a couple of regulatory environments, and I'll give you two examples, that are really putting pressure on water resources in the Western United States. So first, let's look at a particular one in California. It's called SGMA, that Patrick referenced. It stands for the Sustainable Groundwater Management Act. And so back in 2014, the state of California passed a piece of legislation called SGMA, or the Sustainable Groundwater Management Act, which said there are areas in the Central Valley of California which are literally, in some places, sinking by a foot a year, okay, because they're pumping out so much groundwater. And that is completely unsustainable. So they are requiring these groundwater sustainability agencies to come in and create plans to stop that from happening. Well, the consequence of that is going to be that over 1 million acres, they're estimating, that are currently irrigated today will not be in 2040. And to put 1 million acres into context, that's bigger than the state of Rhode Island, okay? That also plays into the Colorado River negotiations. And this is the same thing that's playing out across the Western United States, where there's substantially less water resources than is available. How this ties into the issue of AI and cryptocurrency is all of those data centers that are trying to go into places like Salt Lake City or places in Texas or Phoenix, Arizona, are competing for those same water resources that farmers are. And so if you have this constriction in supplies and this increase in demand, we want to be looking at ways that we could potentially look at opportunities to address some of those challenges. And that's really the sort of the crux and why we started this fund and looking at this fund.
Just to add here, I mean, I think both have talked about their issuance. Why now? I've been talking to most of the issuers since 2017 because we've been in this space since 2017. In fact, some of them are already here in this room. And now they've realized that this is a time because the regulations from the regulator's perspective is actually the adoption has gone up. And at the same time, we see three fundamental issues in RWAs. One is the compliance. These are not meme coins. These are financial securities. So it works as per the jurisdiction of an asset class where you are issuing securities. And the second is the distribution, which is fundamentally important. If you issue securities, you can issue as many as securities or tokens, but you have to have a buy side. You have to have a distribution on the buy side. So this is something which is the adoption is happening right now, and Zonex has been building all these rails, distribution rails, and regulated rails as well to actually make it happen.
So tell us how to make it step by step from zero to mainnet in this real world use case.
I mean, I think this ideally it should go to them, the question, but let me explain you how we actually make it very simple. So the issuer comes to Zonex. We offer this as a private label and a white label service. So if you want to offer any securities under any private placements exemptions in the US, there are certain Reg D 506E, Reg D 506B exemptions. We already put all those rule sets in smart contracts. So if you're issuing something in US, it's SEC's exemptions are already set up. If you are issuing something in Dubai, it's VARA, under VARA, Abu Dhabi's ADGM. So we put almost 22 of these jurisdictions on smart contracts. So you just have to simply select the jurisdictions based on the issuance geography where you're issuing the securities. And then we also have those buy-side networks, which are actually, after you issuing tokens, there has to be a distribution on the buy side. And buy side challenge today is not only going to be one securitize or one broker-dealer network. You need to have multiple broker-dealer networks, multiple family offices, pension funds, endowment funds, sovereign funds, and IRAs to actually distribute your issuances, to actually create the liquidity for the issuances. So we work throughout the whole ecosystem. We have almost 65 plus partners. You can choose and select in between the any blockchains, whether it's permission, private. We have almost 18 blockchains on today. Our live on Hedera is one of them. And then, of course, we work very closely with Hedera because, of course, there are a lot of benefits for the ecosystem what Hedera has built. And we also have different wallet providers. So I think it's kind of like a plug-and-play API-driven access. But I would like Patrick and Jeff to talk more about it.
Yeah, sure. Let me just go back to our story again with all those great connectivity points that Sanjeev's able to provide through Zonix and his platform. For me to do that individually and go chase each one of those RIAs, those allocators, those family offices. I mean, we've done that. Jeff and I have done that. It's a lot, right? So you asked what's our zero to process. So he kind of got you to the back end. We're bringing a prospectus, a PPM, 506D reg straight up. We said, hey, this is what we want to do. We want to keep it contained. Those access to LPs, that's what Zonix will provide for us on a transparent chain, which we love.
So we're talking to chains. What are, why Hedera? Why so many institutions trust you guys?
Well, thank you for that question. So I don't know if a lot of folks know about Hedera, but we're a layer 1, but we're not a blockchain. So we're a hash graph. What does that mean? So whenever there's a transaction being posted, it's not waiting for the block to be filled. There's no leader or proposer of a block. So there's no sort of network congestion that has to be managed through priority fees, and thereby all transactions on the Hedera network will be propagated and will reach consensus within 3 seconds legal finality, which means that there's no spikes in fees. We provide low predictable fee structures, so a fraction of a penny per transaction. Doesn't matter if the network is congested, it's always that. And so a lot of these enterprises that are looking to do this at scale want to know what their sort of cost for a SaaS, if you will, for using the network. And so we really provide a lot of solutions on scalability as well as predictability of costs. In addition to that, the point that I made around leaderless, it also prevents front running. So if you're looking to post a transaction ahead of another, you just have to be earlier than the other person rather than whoever is willing to pay more. And we believe that some of these competing layer 1s that use probabilistic finality and blockchain sort of structures will struggle from the regulator's sense in terms of what is finality. At what point is the asset yours? And can I rehypothecate that asset for collateral mobility? And so Hedera has solved for that. We've built our network from the ground up to solve for enterprise use cases since 2018, and we've been working with enterprises ever since. And so a lot of folks would look at us like, oh, you're the enterprise chain. But we've been seeing on-chain activity grow 400% year on year, decentralized application activity 200% year on year, as well as our DeFi activity growing 2x over the last little while. So we've been really focused on DeFi liquidity to obviously, as real world assets come on chain and becomes composable through DeFi, we're really trying to ensure that there's liquidity and a lot of applications built in their ecosystem. And to your point around some of the strategic partners that we have on our ecosystem, I mentioned earlier that we're operated by Fortune 500 companies, nonprofit organizations, distributed around the world across different industries. And so whenever they're looking to, let's say, distribute to the continent of Africa, we have Standard Bank as an council member, which is the largest bank in Africa. We have the Nairobi Securities Exchange, which is a council member. So we could start to utilize some of our relationships that we have. They've been working with us for many, many years, and they are now very motivated to come onto the network to consume and also distribute these securities around the world. And that's just one sort of corridor, and we have many sort of partnerships around the globe to sort of unlock a lot of this distribution and bringing high quality assets to our network.
I just want to add, what John is saying, because we've already issued 4 major issuances on Reg D 506C on Hedera, and our experience is they have a very strong governing council body, right? Or almost Fortune 500 companies, and we see the distribution to create liquidity for such kind of innovative assets which are going on chain. Actually, if you are on Hashgraph, it helps you a lot, because as I said, the biggest issue in real world asset is the distribution of securities. I mean, we do not have all of these are working in like literally silos. I mean, there's no structured distribution for securities. So and it helps to if you're on a hash graph.
Thank you. So what is the water energy data center nexus you're solving for?
Sure. So I alluded to it in our first point there, but there's a direct tie to, in our mind, how quickly data centers and AI can get rolled out and energy and water usage. So if you're seeing particularly in the Western United States, where a lot of these data centers want to get sited, then you're looking at places like Phoenix, Salt Lake City, Austin, Texas. All of these places have substantial water resource needs, and you've been seeing, too, that there are multiple cases where large data center developers have gone into these particular areas and said, hey, we want to build this data center, but they've faced regulatory problems and getting permits as a result of not having enough water resources. The other issue, too, is we were talking about power on the power side for things like hydropower, Glen Canyon Dam, the Hoover Dam, all on the Colorado River there. If there's less water flowing through there, there's less electricity generation. And this is tying exactly into the rollout of AI. And if you don't have that, I think it's going to be a speed break for how quickly AI and data centers can get rolled out.
Can I add to that?
Sure.
Yeah, sure. So part of our fund, and again, one of the reasons we're excited to tokenize here is, as Jeff's talking about, those water assets that we will purchase under our equity funds, some of our compliance and mitigation credits as well, is the transparency of the blockchain on those as you get your entitlements. If anybody's spending time here in entitlements, particularly in California, I'm sorry. I've done a lot of it, and it's very difficult, right? So as we start to move, and I do believe that this will become a thing, I know here in New Jersey, the title has been put on chain, but I also see compliance and entitlements going in the same direction. Matter of fact, we know it's happening. So as we start to gather these rights, gather these water rights, gather these mitigation rights for flora and fauna in the Southwest of the United States, it'd be much easier for you to prove your compliance with zoning regulations, entitlements, and certainly the data center set is looking at speed to market more than anything else.
In fact, this is our second issuance and exposure to data center space. One of the fund which it's a private equity, $1 billion fund. They actually are, raising capital through tokenization and building and investing that funds actually in building green energy and AI data centers. So we've learned a lot over the last 1 year, from the whole ecosystem of how the data center works. Top lessons are like huge. I mean, there's a huge. So see, what I see is the RWA, the investment thesis would not change. You have to have a good product and a project to actually make the token investors interested to invest in your in equities, right? I mean, or securities which you're putting it on chain. So I think data center, AI, these are definitely investors, favorite, kind of destinations for them to invest. So I see this is the fund which we are actually putting it as a private equity $1 billion fund, and they already have almost close to around $13 billion of signed contracts in terms of building up these data centers across different jurisdictions. So I think it's an exciting space to be in, and of course, if it bundles with the digital assets as a securities, it makes a lot of sense.
It's really interesting to see from the tech perspective what's happening, what kind of cyber risk we're encountering while doing all this. And I think another topic is auditing and reporting. So from your experience, Sanjeev, like how you implement this at every layer while making sure that this use case live and secure?
I think that's this question for you, actually. So yeah, but I'll just so we work with Hacken anyways in terms of the smart contracts audits. But the important part is of course on blockchain the audit trails are already there. So in terms of the the regulations are concerned, the SEC is concerned. So we, of course, the smart contracts audit needs to be there. Besides this, the regulations and compliance, which is already inbuilt in our, all our smart contracts. We have our own standard for EVM compatible chains is ERC 7518, which actually gives you it's an open standard, and it gives you the access to, issue securities in any of these jurisdictions where those rules are already inbuilt on a smart contract. And that's one of the reasons that if you go to Dubai and if you want to issue securities in Dubai, the VARA regulations are already inbuilt in our contract. If you want to do it in Abu Dhabi, it's ADGM. So I think these would actually benefit the regulators and the compliance perspective is concerned. And of course, in terms of the smart contract audit is actually you.
Yeah, definitely. I just wanted to hear your perspective, how we actually implement security from the day zero to this kind of process. Definitely for us, it's about not only like code reviews, but also like on-chain security monitoring, making sure that you're having all the risks live and reacting appropriately with like proper incident response plan, like ongoing monitoring and stuff like that. But also, we have not much time left, but I really want to touch a bit on the success post-launch, both investment and operations. How does it look like?
So, no. Launching on Zonix with our friends Hedera and Hacken here clearly is our first step to success, which it will be. Raising our target capital, acquiring our land, improving our business thesis in the first 6 months. I'm highly confident Simon Gardner will be able to do that. Matter of fact, I know we're going to do it. And then bringing additional funds and additional raises at the end of that 6 months is going to be really my standard for success, as well as qualified investors with name brands coming to the fold. Jeff?
I think you covered it all, Patrick.
Thank you.
So for us is definitely a white listed marketplace for Patrick and Jeff, and at the same time we see the product which we are launching is actually Secure Connect, which basically connects you with the multiple buy-side networks. So that is something which is interesting for us to see the actual liquidity distribution rails for such kind of issuances, and see the response from the family offices or pension funds or endowment funds to access this kind of securities from the sales side. So I think that's the success matrix would probably be different in terms of every individual out here, but for us is to actually implement the entire end-to-end model for issuer and institutions to see the sales side and the distribution on the buy side as well.
Yeah, just to add to that, I think what's really exciting about tokenization is really democratizing access to this asset class, right? And so, and also to be able to use this as composable sort of instruments for unlocking liquid capital as well. But I think, as we start to see more folks from overseas investors now wanting to access U.S. high-quality assets and dollar-denominated investments, there's a lot of folks in the emerging markets that want to have visibility to be able to access these in a smaller ticket size. And so we are continuing to create that sort of ecosystem, which we have on-off ramps around the world. We have trusted distributors and sort of networks, as Sanjeev mentioned, about connecting the marketplace to all these various RIA, family office, and various networks. And so we want to really kind of expand the audience and really allowing for access for anybody.
And John, let me just foot stomp that and qualify those investors for us, so that reduces quite a bit of burden on Jeff and my team's ability to raise that capital in those funds in a faster, more efficient manner.
In fact, we work with a lot of PwC, EY, they are one of our partners, and they recently we've seen there's a lot of uptick in terms of the institutions to diversify their funds into digital assets. Today, the only option what they have is ETF, Bitcoin ETFs, but there are no qualified RWAs coming in, so that's one of the reasons that we see such kind of issuances would actually increase the adoption from the buy side. And I wanted to ask you, John, what do you think about a lot of these governing councils companies, right, of Hedera? Do you see that these companies are also, because we've been talking to some of your companies, and they've been seeing there's a lot of interest from them to invest in digital securities, predominantly RWAs.
Yeah, absolutely. And so the last couple of months, we've been really putting a lot of pressure of our council members globally to participate on the on-chain tokenized economy. A lot of these Fortune 500 companies have a massive treasury that would want to have perhaps a smaller allocation, but an allocation to these asset classes, and we're really unlocking that now. These folks have been sitting on the sidelines, unfortunately, until recently because of the regulatory uncertainty. And now with the Genius Act and hopefully the Clarity Act, a lot of these sort of public-facing companies are a lot more comfortable getting into the space. And so we're really seeing that massive inflection from that group.
Thank you.
I think we're like 20 seconds, like one line, like what are you hoping for tokenization?
Tokenize everything.
Yeah, thank you. Decentralized assets, access to our business.
Thank you for your time, everyone, in addressing the water energy nexus.
We'd love to see a lot of the traditional, unfortunately, the gatekeepers coming into the space, because at the end of the day, there's a lot of trust in some of these broker-dealer networks and their financial advisors. And so we need to unlock that distribution angle, because at the end of the day, they trust the advisors, they trust the brands that are putting these products on the shelf. And so we need to engage with that group and really get them on chain for these real-world asset tokenized products.
And for us, it's definitely security by design. Thank you.
That was about asking a question.
Thank you.